Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hiding in plain sight that could make or break your investments. Today we're diving into DAVITA Inc.'s latest filing, and let's just say they're opening up their wallet in a big way, but is it a sign of strength or a tricky move? So what's the big news here? DAVITA, a major player in kidney care, has just announced a significant increase to their share repurchase program. They're adding a whopping $2 billion to the pot, meaning they're feeling confident enough to buy back a lot of their own stock. This announcement was made on August 20th, 25, and it's important to understand what this really means. Think of it like this: a company using its own money to buy its own shares off the market. Why would they do that? Well, it can make the remaining shares more valuable by reducing the total number of shares out there. It can also be a signal that management believes the company's stock is undervalued, like saying, hey, we think our company is worth more than the market is currently saying. Now, this new authorization of $2 billion is on top of whatever they hadn't already used from a previous buyback program announced back in September of last year. This means their total ability to repurchase shares could be quite substantial. One of the interesting details is that the company hasn't set an expiration date for this buyback program. This gives them a lot of flexibility to repurchase shares whenever they see fit. They can do it openly on the stock market or through more private deals. They even specifically mention a share repurchase agreement with Berkshire Hathaway Inc. This is a big name, of course, and it suggests they're actively managing their share count with significant partners. But here's where we need to be a bit cautious. The filing also makes it clear that this doesn't obligate them to actually buy any shares. They can also pause or stop these buybacks at any time. It's like having a credit card with a huge limit, but you don't have to spend it all. They also pointed out that they are subject to certain repurchase limitations, likely due to their existing bank loans and other financial agreements. As with many of these reports, there's a section on forward-looking statements, which basically means they're telling us about things they expect to happen but can't guarantee. They're using words like expect and anticipate, and it's always wise to remember that actual results can often be quite different due to various risks and uncertainties. They're essentially saying the future might not look exactly like they're hoping for. The report is signed by Joel Ackerman, the Chief Financial Officer and Treasurer. This tells us the financial leadership is behind this decision. Now let's put this into perspective. DAVITA is a giant in the dialysis service industry. They've faced challenges like regulatory changes and competition, but they've also shown resilience by expanding their services and improving patient care. This buyback is a strategic move. By reducing the number of shares, they can boost earnings per share, making the company appear more profitable on a per share basis. This can make the stock more attractive to investors. It's to make the stock more attractive to investors. It's to make the return capital to shareholders when they believe their own stock is a good investment. However, we need to watch how they actually deploy this. If they repurchase shares at inflated prices, it could be a waste of valuable capital that could be better used for growth initiatives, research, or paying down debt. The mention of Berkshire Hathaway is significant, suggesting a potentially large structured repurchase. We'll need to keep an eye on their filings to see exactly how much they buy when they buy it and at what price. The true success of this strategy hinges on smart execution and a continued belief in DAVITA's long-term prospects. So what's my take? DAVITA is making a clear statement of confidence with this massive share buyback authorization. It signals they believe their stock is undervalued and are committed to returning value to shareholders. This can be a positive sign for investors, but it's crucial to remember that buybacks aren't a magic bullet. Their effectiveness depends on the company's overall financial health, their ability to generate growing earnings, and the prevailing market conditions. DAVITA's position in the vital kidney care market is strong, but they still need to navigate the complexities of healthcare regulations and competition. Without seeing the actual execution of these buybacks, it's hard to give a definitive verdict, but for now, it's a signal of strength and a commitment to managing their shareholder value. Alright, that's our breakdown of DAVITA's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.